is very, very much a blessing to have this man talking about all things AI and all things technology, and ultimately how that impacts your stock market portfolio moving forward over the next 5 to 10 years.
CEO of NVIDIA. It's got a market cap of $4.5 trillion, makes it the world's most valuable company. And Jensen, it is a pleasure to have you here on set.
So happy to be here. Nice to see you.
Not as happy as we are. Thank you for coming in today. It's great to see you.
Thank you.
There are so many things that I'd like to talk to you about, because it seems like every day there is this huge fire hydrant of news that's all about AI. And your company is at the center of most of that news. So if you don't mind, maybe we can just run through some of these headlines and you can explain what's happening from your perspective.
I'd love to.
Okay, let's start with the deal that you cut first with OpenAI that you've talked a lot about, that was then followed up by this deal earlier this week with AMD and OpenAI. It's got a lot of people trying to figure out what the dynamics are of this industry. What do you think about it? Did you know about that deal before it was announced?
Not really, but our deal is very different than theirs. We've been working with OpenAI through Azure, Microsoft, and OCI, and CoreWeave, and so through third parties for quite a long time. In fact, in 2016, I delivered the world's very first AI supercomputer called DGX-1 to a startup, a nonprofit startup in San Francisco, and that company turned out to have been OpenAI. And so we've been working with them for quite a long time. The OpenAI partnership is an addition to what we're already doing with them on the cloud. All of the cloud contracts, we're going to continue to execute on all that. But our partnership with them is quite unique in the sense that this is the first time we're going to sell directly to them. Until now, we've been largely selling, we've been only selling through the clouds. And so we're going to keep doing that. But the thing that's really exciting is that now, by selling directly to them, we could help prepare them for a day when they're self-hosted hyperscaler. And our agreement basically entails us selling entire systems and infrastructure to them. We're the only company in the world today that really focuses on building the entire AI infrastructure, from CPUs to GPUs to networking chips and switches of all kinds and all the software stacks that go along with that. And so we're quite a unique partner for them to be able to do this.
So partnerships, right? Business deals means everything in the current state of where we are in our technology, as well as AI and our investments, right? We are moving into the conversation about money right now, right? OpenAI, what is OpenAI? OpenAI is the company that basically is the owner of and the software when it comes to the application of ChatGPT, right? If you didn't know, OpenAI is ChatGPT, and it runs ChatGPT, which is mostly known as the most popular artificial intelligence application in the world, and it's not close. OpenAI is a private company. It's not a publicly traded company yet, right? We're looking at maybe a 2 to 3 year runway for OpenAI to become public. But right now, OpenAI is building out a support, manufacturer, and supply base to power ChatGPT and the new products ultimately in the future for the company before they go public, right? So NVIDIA, right, providing the chips, the AI build out, as Jensen Huang talked about, to OpenAI is a massive situation and a massive deal when it comes to how you should look at investing and ultimately artificial intelligence over the next 10 years, right? So all of the news that you see with NVIDIA, AMD, OpenAI, SoftBank, you see, what you need capacity wise for energy, for electricity, data centers, and all of these things with Microsoft and everything we have going on should tell you how you should be investing ultimately over the next 10 years, and then who you should be invested in also.
I guess the question becomes, it's great for you to sell directly to them, but they don't have the money to buy it at this point. Is that why the deal was structured the way it is, where you'll get a stake in OpenAI over time?
They don't have the money yet. And the way that it's going to happen, for every gigawatt of AI factories, you're probably going to need about $50 to $60 billion for the land-powered shell and all the computing and networking and all that, everything that goes along with that. And they're going to have to raise that money through, first of all, the revenues, which is growing exponentially, equity or debt. And they gave us the opportunity to invest alongside other investors when the time comes. And so it's not something we have to do, but it's something that they're giving us the opportunity to do, and I would love to do. One of the things that we did, we invested in OpenAI early on. My only regret is that we didn't invest more. I mean, this is the most profitable, the most valuable startup company ever. And so this is a great opportunity.
You mentioned that your deal is very different from AMD's. AMD is in a situation where they're basically giving away a big chunk of their company to be able to be a partner with OpenAI and sell them some of their goods. Is that how you read it?
Yeah, I saw the deal. It's imaginative. It's unique and surprising. Considering they were so excited about their next generation product, I'm surprised that they would give away 10% of the company before they even built it. And so, anyhow, it's clever, I guess.
Yeah, I wondered the same thing. And Lisa Su, who, by the way, is a distant cousin of yours,
yeah,
right?
she's terrific.
At AMD.
Yeah, she's terrific.
The way they've set this up, though, of giving it away, they're also making some big assumptions that their chips are going to be able to compete with your chips that are coming out down the road. Do you think?
So let's take a look at these deals, right? And this is OpenAI's deal spree that they have been on a tear since the beginning of October, right? So you have AMD, which is another chip supplier, right? When it comes to CPUs for OpenAI, right? 6 gigawatts up to 10% stake. So OpenAI is getting a 10% stake into AMD in the company, which is what Jensen is basically talking about. The difference between the NVIDIA deal and the AMD deal is they're not getting a stake in NVIDIA specifically. They're actually paying NVIDIA for NVIDIA's build out when it comes to the chips, right? You have a Stargate partnership that was announced on October 1st, and you have the Oracle SoftBank partnership also that was announced in September, which is basically data centers. I think that was out in Texas, I believe, for the build out for data centers in Texas as they continue to build out the manufacturer and infrastructure for artificial intelligence moving forward. And then you have the NVIDIA deal also that we just spoke about. So OpenAI has been on a tear when it comes to doing deals, doing partnerships, getting in the bag, making sure that they have the right, people around them, the right suppliers, infrastructures, cloud, everything. And we're going to talk energy. We've talked energy in the past. We're going to talk energy in a second. But this is so important to your investment portfolio, how you need to be investing, and ultimately what you need to do moving forward. And when you think about artificial intelligence and AI.
I think that's the case.
Well, our chips are quite special, and we're running really fast. We're the only company in the world today that builds all of the chips inside an AI infrastructure. And today, back when we first started, 5 years ago even, an Ampere chip or a Hopper chip is just one chip. Today, if you want to build one of these AI supercomputers, it takes a whole bunch of different types of chips to get the performance out of it because, Moore's law, the transistor itself is really slowing down. And we want to create those X factors of performance increase every single year. And we're delivering these new systems every single year. And every year it's multiple times faster than the last generation. In order for us to do that, we have to optimize the entire AI infrastructure. That supercomputer is the most complex computer the world's ever made. And we optimize across all of that, design new chips every year. So one chip alone is not probably going to be able to deliver the type of results we do. And but anyways, they're a really good company and we take them very seriously. And we just kind of have to keep running fast.
Let's talk about vendor financing, because that has been something that has raised a lot of questions on Wall Street since you cut this deal with OpenAI. Yesterday, Bloomberg is reporting that you have a $2 billion in financing that you're going to be involved with 𝐥𝐢𝐤𝐤 to help them with these same stories. But this idea of circular financing, your customers can't afford to buy these chips yet, so you're going to help them out with money along the way. That leads some people to think back to what happened with companies during the big buildup like Lucent or Nortel in the early days. Is this different, and if so, how?
Well, first of all, 𝐥𝐢𝐤, I'm super excited about the financing opportunity that they're doing. You know, if the only regret I have about 𝐥𝐢𝐤, we're an investor already. The only regret I have is I didn't give him more money. You know, almost everything that Elon's part of, you really want to be part of as well. And he gave us the opportunity to invest in 𝐥𝐢𝐤. I'm just delighted by that. And so that's an investment into a really great future company, and I'm really excited about that. That's not vendor financing per se. But what's going on in the world versus what happened in 2000 is just dramatically different. You know, back then, as you recall, there were pets.com, hospitals.com, and all of the internet companies combined was what, $30-40 billion in size. If you look at the hyperscalers now, that's where the first tranche of AI infrastructure is building. If you look at the AI, the hyperscalers have about $2.5 trillion of business that's already operating today. That business, that $2.5 trillion business, and the capex that goes underneath that is about, call it $500 billion. That transition from a classical CPU-based computing to now generative AI computing powered by GPUs, that transition is just starting. So we've got to build into $500 billion worth of capacity infrastructure that's already naturally growing by itself. And we're in the beginning phases of that. If you just look at NVIDIA's AI infrastructure business, you know, call it a couple of $100 billion so far, we're a couple of $100 billion into a multi-trillion-dollar build out. So that's number one. The second part of it that's really unique is that we have a new generation of AI companies. The new AI companies like OpenAI and Anthropic and 𝐥𝐢𝐤 and companies that are well, you know, Thinking Machine Labs from Mira and Ilya Sutskever's SSI and Misha's company Reflection. And I mean, there's a whole bunch of amazing AI model builders now. This generation of AI model builders, what's happened in the last several months, a transition happened that is really, really important. For the last several years, they've been generating tokens, you know, these AI tokens, basically at a loss. And the reason for that is because the early AI models they were super interesting, really captivated a lot of attention, but they weren't useful enough to pay for. The last several months has been very clear that the new technology is now reasoning, it's doing research. Before it answers a question, it goes on the web and studies other PDFs and websites. It can now use tools, generate information for you, and it creates responses that are really useful. I use it every day to the point where now the tokens are profitable.
The question, though, is who is going to continue to pay for that build out? Is it the big companies like a Procter & Gamble? Is it consumers who are going to do this? I mean, my doctor showed me the AI that he's using, and it's incredibly helpful, but there's still a question about whether he's going to pay for it or the company he works for.
What I believe is so important here is a lot of people talk about the AI bubble, and they try to bring the .com bubble that happened in 2000 and, you know, late 90s, 1999, 2000, 2001, that the stock market, it was a bubble, you know, all of these .coms, yahoo.com, you know, all of these .coms, and it basically tanked because it wasn't as efficient or effective as people thought it was, right? So they're trying to compare now to what happened in the .com bubble. Now, I do believe there is an AI bubble that will happen over the next, let's say 2 years from now, let's say 2027. But are we currently in that right now? No. If you pay attention to CapEx, we pay attention to market cap of these companies, we pay attention to the continued build out and the infrastructure that need to be built for all of these businesses to do the amount of AI and capacity that they need to progress forward over the next 10 years. The CapEx number is so large, right? He just talked about $500 billion, right? for a build out for data centers, energy, cloud computing, memory, cooling when it comes to data centers, electricity, solar, nuclear energy. There's so much that's included in this that you have so much money being passed from company to business to this company to that company to where over the next 2 years, the build out for artificial intelligence is going to be so massive that these companies are making so much money. However, this is the issue. They will have to then show that they're making the money to combat the profits and the revenue ultimately in the capex that they're going to have to put out for the build out. Now, when does that happen? That's probably not going to happen in 26. Now, will it have to be then forecasted to show in 27? The answer is probably yes. So if you are investing in companies today, you don't need to worry about a bubble right now. You don't necessarily need to worry about a bubble in next year, but you do have to start being concerned with the forecast of earnings in 26 going into 27, because then it's going to tell you, okay, is these companies that spend all this money on artificial intelligence going to start making profits off of it, or was this all a farce and all of this money when it comes to debt, using debt to put into investments or using other people's money to put into investments? Ultimately, in the end, they have to show revenue and profits for the build out, but that's not going to be required until 27. So I wouldn't worry about an AI bubble right now, but going into the end of 26, end of next year, going into 27, that is really when the concern starts when it comes to if artificial intelligence is worth all of this money, and if these businesses ultimately in the end will continue to drive revenue and drive profits moving forward.
Going to pay for it.
Well, hopefully both. I think there's the consumer part of it. You know, a lot of OpenAI customers are consumers and they're paying for it. But the thing that's really cool is that the enterprise AI build out that's happening now, my favorite enterprise AI service is Cursor. Cursor is an AI coder. And every one of our engineers, 100%, is now assisted by AI coders. And our productivity has gone up incredibly. And so you're now seeing enterprise AI companies like Cursor, Open Evidence, I love Lovable. All of these companies are some of the fastest growing companies in the world, and they address enterprise. And so enterprise AI is here.
I wonder how you think about, Jensen, the ultimate destination where all this is actually building toward. I don't know, there was a post from David Connie, a Sequoia partner, this week saying, look, AGI is the only thing that can justify the volumes of capital spending right now, artificial general intelligence. At the same time, many of the model builders and experts are pushing out the date where that maybe is going to be achievable. Meantime, you're talking about annual generations of chips. How fast do they depreciate? We're putting all this capital in these data centers that it's just not clear like when we get to the end, or is it just a treadmill?
We are going to have incredibly profitable and incredibly useful AIs long before AGI. Mm-hmm. And for example, right now, Cursor AI. Yeah. You know, Cursor's AI software coder is incredibly useful. All of our engineers use it. We have some 40,000 engineers. Almost every one of them are going to use it, and they're loving it. And so
they're using it instead of something else, presumably, right? So these are displacing things.
Yeah, they're not. This is a brand new thing.
Yeah.
Remember, AI, unlike previous technologies are tools that humans use. Excel is a tool that humans use. A web browser is a tool that humans use. For the very first time, we have technology that can actually use tools by itself. And so Cursor uses, Visual C++, and now we have Gemini agents that are able to use the browser and browse for groceries or destinations or book travel for you, and it can use tools by itself. So this is really quite an extraordinary thing. This the tool industry is a few $1 trillion.
Yeah.
Tool user industry is $100 trillion, which is the reason why everybody's so excited about the future of technology, because it can augment labor, it can increased the productivity of labor. And here at NVIDIA, it's increased our productivity tremendously.
So increase the productivity of labor and to combat labor at the same time. Hey, so what does that mean? We talk about how AI can then take your job, right? If I got an employee base of 100 people and AI can basically make one person more efficient, by then also taking, let's say, 25% of the people of the labor out of the workforce. So if I only need 75 people to work for my company, by then making them more, efficient by utilizing artificial intelligence, then why do I need a total of 100 people? This is the issue, though, is we're going to see companies lay off workers because artificial intelligence can do your job. And this is also part of the dialogue and the conversation that we need to have, right? Because if we don't have it, then people are going to be surprised that they just get laid off because AI then took your job. When people speak, you got to understand what they're saying and ultimately what they're really coming from when they say certain things. And that's in his situation. What he's saying is, yeah, sure, it's going to be more productive for you to be a better worker because you're going to utilize AI. But also at the same time, it might take some jobs for some people if AI can do it for you.
Already said you wish you could have bought more OpenAI and maybe invested more in 𝐥𝐢𝐤𝐞 at this point. That implies that you don't think that this is all redundant. Because a lot of the players, I mean, if I read what Sam Altman says and the message he tries to convey, it's as if they're sprinting to try to stay ahead of everybody else because they think it's not going to be room for everybody necessarily who's trying to do something similar.
I think there's general intelligence and I think there's specialized intelligence.
Yeah.
We love general. When I hire engineers, I like them to be generally intelligent. And that's a great thing. But once they come to NVIDIA, we make them highly specialized intelligent so that they could build things that NVIDIA needs. And so I think the idea of specialized intelligence versus generalized intelligence will continue to happen. And where the real value for enterprises and companies is specialized intelligence. And where the value for consumers, general intelligence.
Hey, Jensen, let's talk a little bit about capital allocation and how do you see that? Just back to those same points that you wish you had more invested in OpenAI, you wish you had more invested in these other companies that you're kind of taking stakes in, like an 𝐥𝐢𝐤𝐞. You can do things with your money. You can choose to put it back into R&D. You probably don't need a ton with that right now. You can choose to build the company. You can choose to make acquisitions. You can choose to give shareholders back big dividends, or you can invest it yourself in other companies. And lately, what we've seen is a lot of investing in other companies. Do you have other deals like that planned in the works?
We're always looking for great startups to invest in. One of my favorite ones was 𝐥𝐤𝐤𝐤.
Right.
My only regret is I didn't invest
Add that to the list.
enough. Yeah. And so in all of these investments that we've made recently, we've made some really terrific investments. And largely my only regret is that we didn't invest more. Because these are really special companies and they're part of our ecosystem, building out the AI infrastructure for the world. And AI is several things. AI is energy, AI is chips, the models, and the applications. And so you could see NVIDIA and you could look at me working across that entire stack of ecosystems around the world. And we need more energy, we need more chips, we need better models and more models, and we need a lot more applications.
So what of your cash flow that you kick off, and Mike, I knew you ran the numbers, what is it?
I was just looking at the consensus, like 240 billion in free cash flow this fiscal year and next is what is.
So that's a lot of cash that you can choose to set to work.
Mm-hmm.
Do you look for other investments within the AI infrastructure? Do you look for ways to build out extra energy? Do you look for somebody in quantum computing to get to the next thing that you could buy? What's in your brain at this point?
All of that. I'm excited about enterprise AI applications. And if I would have realized that the Cursor team was raising money before, I would have given them all my money. And so this is really terrific stuff. I'm excited about the work that Open Evidence is doing in helping digital nurses and digital with diagnosis. I'm excited about the work that Figure is doing in robotics. Wave is doing in self-driving cars. Wabi is doing in self-driving cars. And so there's just an incredibly large set of new companies that are enabled by this revolutionary technology called AI.